Success is a lousy teacher. It seduces smart people into thinking they can't lose. Bill Gates of Microsoft. And Bill makes a great point. So many people think when the market's going up, 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 they are geniuses. They are watching the tide come in and all the boats in the harbor rising, and they think somehow they figured out some magic. But then when you start getting the quirkiness in the market, when things start going up and down and markets are dropping and nobody's really looking at the charts or developed any knowledge on how to read them, they don't know what's happening. That's why we urge you to be with us every day, 10 to 15 minutes. Practice trade, practice trade, practice trade. People who get a little bit of stock market knowledge and start spending their money will quickly lose it. This is not Vegas. This is not gambling. We trend follow, particularly with the weekly vertical crossovers. That's the main thing we are looking for. Then, of course, the 2-day recrosses. It's so important. You'll learn about all of this if you spend 10 to 15 minutes with us a day and you take all the special trainings that we provide every single day. Today's the secret for maximizing the Monday or the weekend effect. Guess what might be happening on Friday? We might have a weekly vertical crossover, and you can use the Monday effect or the weekend effect to help you jump into a successful practice trade on Friday, but you need to know what it's all about. How do you learn that? You take that training. It's going out to everyone today who's a subscriber at chartingwealth.com. Doesn't cost you a thing to go there. Sign up, put in your name, email address. You'll get the trainings every single day, plus what you're listening to right now and hopefully watching also, providing both audio and video. It is our daily review, and then once a week, our weekly review and forecast. So let's jump into these markets. Stocks up for the day, bonds and gold down. What do we see forming? Things have changed over a little bit. As we told you yesterday, we're only 2 days into a 3-day candle, now 5-day candle. Now we're 3 days into a 5-day candle. We see the price percent oscillators going up, derivative oscillator losing momentum. We have reached a higher high this week than the prior week. Candle, while not as big, is higher than the prior week. So again, things are looking okay at this point. We'll see just how high these markets will go. We go from the weekly to the 2-day. And what did we have happen? Well, it is hard to see, but it does not, well, it's really, really hard to see. I can't call it. Whether it's a 2-day crossover or not, it looks like it is not. So we'll wait until it is definitive. We'll see if we do have a bounce off, and you can see a strong bounce off over the next 2 days. Remember, we just, the earlier candle this week ended on Monday. That represented Monday and Friday. The latest candle represents Tuesday and Wednesday. So it is a completed candle. It's a green up candle. Price is above the 2-day trend line, above the weekly. See if we have a bounce off. If the close of this candle, it's bouncing off, heading up, well, guess what? You've already got a weekly that is going up. The 2-day is, again, possibly still going up. It bounces off that red signal line, might give you an opportunity to ride the up current a little more with what we call a recross. We'll wait and we'll see. We'll help you call that when that occurs. We got 2 days to watch. See what happens. If it goes down, then of course market starts heading down. That will pull us out of any up trade you might have been in or been thinking about. We go to the 4-hour chart. Still hasn't crossed over, going up in the morning, up a little more in the afternoon. Again, for the day up 0.53%. Haven't had a crossover yet of the price percent oscillator on the 4-hour chart crossing over, going up. Derivative oscillator still negative on that 4-hour chart. That's the S&P. Leave the S&P and go to the Qs, up more for the day. Like we said, the S&P up 0.53%. The Qs of the NASDAQ 100 up 0.75%. Price percent oscillator going up quite nicely. Derivative oscillator looks like it's gaining a little bit of momentum. Prices above the weekly right there at the 2-day. We go from the weekly to the 2-day. What do we see there? Nice green up candle. Price is above the 2-day trend line. Price percent oscillator is less than flat, more than flat. It's going up a little bit. Derivative oscillator still losing momentum. And we go to the 4-hour chart. What do we see there? Crossed over in the morning and continuing to move up. Now, some of you might be asking, is that an opportunity to jump in the afternoon? It is. The further along you get, the riskier it gets. But again, if you set your loss parameters and you've been practice trading and you've been watching and seeing how well that has done for you in the past, you can sure practice trade that. And again, I encourage you to find every practice trade that you can practice. Why? Because practice, perfect practice makes perfect. And you got to practice to understand how this works. If you're not practice trading, you're just listening to us every day as you drive home, you're just not going to get a whole lot out of it. Yes, you'll learn a few things, you'll learn some phrases and terminology, but for you to really get good at this, you've got to do the practice trades. And guess what we have in the show notes every day for free? We got PDFs there you can print out. The daily market worksheet, the weekly market worksheet to fill out once a week, daily market worksheet every day. But in particular, the trade worksheet. It helps you keep up with the reasons you went into the practice trade, how it went throughout. You're documenting as you go and noting down what you learned so you can refer back to it later. It will make your learning so much more valuable. So please do that. I urge you to do that. Besides the 10 to 15 minutes a day, add in the trade worksheet, which you can fill out as you're going through the show. So please do that. In addition to the daily market worksheet, and once a week at least the weekly market worksheet. So that's where we are on the 4-hour chart. That's where we are on the 2-day and the weekly when it comes to stocks, both the S&P 500 and the NASDAQ 100. Let's go on to bonds. Bonds down for the day, 0.66%. You don't want to start with the 4-hour. Remember, you always start with your largest chart first. And what do we see? We have a green open box spinning top. That's what our Heiken Ashi candlesticks are showing us. Indecision tending up. But what is our primary indicator, the price percent oscillator, showing us? It's moving down. Now, not super strong down, but it is moving down. And it looks like the derivative oscillator is just about flat. And again, we're 3 days into the 5-day candle, into the week. So we'll continue to watch and see what there is to see. But overall in bonds, decidedly down. We go from the weekly to the 2-day. And look at that. Not enough energy to cross over, going up on that 2-day chart. Derivative oscillator still losing momentum. Price percent oscillator is actually, it looks like it's less than flat. It might be heading down just a little bit. We'll continue to watch, see what there is to see. Remember, that means bonds are still down on the 2-day and the weekly. What do we see on the 4-hour chart? Look at what happened at the end of the day. Crossed over, going down rather strongly. That again is a recross on the 4-hour chart. Now that's the weakest of our crosses, but it is confirming both the direction of the 2-day and the weekly. So again, that's a potential trading opportunity, not the best. It's actually the least of all three. The best is the weekly vertical crossover. Next is the 2-day recross, and lastly, the 4-hour. But again, urge you to look at all these, explore all these, pay attention to all these, see what there is to learn from each of them. Down in the morning, further down in the afternoon, for the day, down 0.66%. And again, you can see what happened on the prior recross going down back on the afternoon of the 31st. It went down and then popped right back up the next morning. So again, word to the wise, pay attention, practice trade, learn what you can from all of this. It's the whole reason that we talk about documenting what it is you're doing and why, and learning from it. You will find opportunities abounding. And again, sometimes, as Bill Gates said, or as he inferred, you're going to learn more from the mistakes you made than from the things that went right. Remember the quote at the beginning? Success is a lousy teacher. It seduces smart people into thinking they can't lose. Well, if you stay around the market long enough, you will learn there's always an opportunity to lose, but there's also many, many opportunities to win. Now, we're going back to the weekly and heading to gold, down for the day 0.75%. But look at that beautiful up candle. Weekly still strong. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. Weekly still strong in gold. What do we see on the 2-day? Well, we see that the prior 2-day candle high was 148.48. The current 2-day candle that just ended, 148.61. So not reaching a higher high. You can see that reflected in the price percent oscillator, not going up at the same angle it had been. It weakened a little bit, but that derivative oscillator still moving up strongly. Price still well above both the 2-day and the weekly trend lines. That's looking good. Now let's explore that 4-hour chart. What do we see there? Well, we see the weakening actually peaked all the way back on Monday the 6th. That Monday effect drove through Monday morning and then sort of peaked and weakened as we went through Monday, Tuesday, and Wednesday. Some indecision in the morning, then down in the afternoon. Hasn't crossed over going down, but keep in mind, again, how strong the weekly and the 2-day are, and we'll just continue to watch. Your loss parameters are in effect. Your profit, again, I hope you're using profit and loss bands. Those need to be on your chart. You need to be consulting those. And we'll just watch and see what there is to see. Once you make the decision to jump in, 4-hour chart shows you some things, but remember, all things being equal, the market tends to move in the direction of the largest chart. And the largest chart is that weekly, and it's still nice and strong. So we shall continue to watch and see how well that gold trade is going. For those of you who jumped into a practice trade on Friday, those of you waiting to see how it's going to be this Friday, we may have a weekly vertical crossover going up. If so, remember, your buying point for your practice trade is going to be Friday afternoon there around the close of the market. We will watch and see what all those charts look like, all the charts, all the time. Folks, that's where we are as we end the day. You hadn't purchased our book, we have a copy autographed, ready to go out to you. Follow the link in the show notes. If you live overseas, email us, cw@chartingwealth.com. We'll send you a PayPal invoice. For some reason, we can't clear the Square with Square, our credit card service, for overseas orders, but PayPal will do that for us. We'll send your book to you wherever you are in the world. God bless, my friends. We love to hear from you. cw@chartingwealth.com. All the best from the whole team at Charting Wealth World Headquarters.